Hello friends, welcome to my channel and thanks for watching this video. Friends, we have ended with one more miserable week in the Wall Street, and things are not at all looking good as far as the numbers are concerned. But as I said in my latest short videos, that this is the last leg of correction. It's going to be big, it's going to be bad as well, but the silver lining is there will be a light at the end of the tunnel. So with this positive optimism, let us quickly restart one of the another session of USA weekly market report, because we have ended the week and we have to prepare ourselves for the upcoming week going forward. So let us see what is working in the market, and there are lots of things. This geopolitical crisis is actually makes the inflation worse. you know you there is a problem and there is a cure for that, but if you don't try to solve the problem and you are giving medicines which is not at all correlated, not even indirectly correlated with the problem, then obviously you are just you know giving the time to the patient to just survive by their own health status, with the help of its own body status and how his or her body is functioning. So this is not the kind of thing we are looking at. Anyways, if this one thing goes back to a stalemate position where we have a year back, then obviously inflation will come down substantially. And in terms of energy crisis, in terms of food crisis, there are lots of things which will solve very easily. Okay, and what the central banks are doing right now, they are literally crushing the demands, increasing the interest rate continuously. Now this is one of the big headlines: Eurozone inflation soars to a record 10%, piling pressure on the ECB. Now this is something, Eurozone, obviously there are brilliant people and the top minds that are working in the top institution, but the thing is, you cannot bite more than you swallow. So the thing is, the unnecessary tactics inside which the entire European Union right now is reeling under pressure because of the energy crisis. They are literally facing some things which they haven't yet expected. Okay, this is called short-sightedness. Obviously this is something which is very unnatural, but you need to understand that human does not want to evolve until and unless they go through a deep crisis. And when I'm talking about deep crisis, it simply means the society will suffer and suffer a lot. So this is something which has happened couple of thousand years back, and this is happening right now, and this will probably happen again in the future. So that's something we need to understand, that to make ourselves better, we need not to go through a crisis. We just need to identify ourselves. So this is a long run situation, and there is a direct correlation between these two news. Okay, that's what I want to say. Apart from that, this Russian pipeline leak, the Nord Stream leak, and there are leaks which are large in number. I think if I read correctly, please let me know in the comment if I am wrong, that there are 4 or 5 leaks that has happened. It has its natural consequences, and obviously those who have done it, they don't even think about you can call them selfish, ultra selfish. They don't have any human ethics, at least sensibility. And you are talking about this is called hypocrisy. The West is always talking about climatic change and all those things, and now whomsoever did this, obviously it's not the right thing to do, because you are just destroying the ocean. The ocean life will get disturbed, the human life will get disturbed, and just for the sake of proving your wrath, I would say, at that time you are doing these kind of things. So hopefully sanity will prevail going forward. Obviously, markets, we are going to talk about it, and there are lots of things to talk about. Apart from that, EU countries approve energy windfall levies turns to a gas price cap. Let us see whether this will happen or not. Bank of England intervention should be sufficient to calm the market, says Dutch pension fund investor. Let us see because their forex reserve is extremely low. I think it's $80 billion right now, if I'm not wrong. So I don't know whether it will be enough to soothe the nerves of the market or not. Also, let us see if there is another news or not. Fed Vice Chairman Bernard warns against retreating from inflation fight prematurely. So this is a wise statement, but there are leg pullings from both the side, and it's not about hiking the rate directly, because you will see lots of news where the credibility itself is at stake. So these are some of the important headlines which has impacted the market, and these are important things to be shared. Now let's start our actual analysis on the market and what has happened and what will probably happen in the upcoming week. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now first of all, let me cover the basics, then I will share you some of the important thing. If you are looking at the Friday's close, Dow Jones down by 500 points or 1.71%, Nasdaq 1.5% down 161 points, and S&P 54 points down 1.5%. Gold is down, but the good thing is it is trading very near to 1670. 1670 is one of the biggest support, so it is trading near that. That's a good sign. Oil is going down. The reason is different. Obviously, it's not because the demand is down, but you are making money costly. That's the reason why the oil is going down. Apart from that, the important thing, or I would rather say the very important thing to look at here, is the VIX. VIX is trading above 31. This is not at all a good scenario. It simply means if it closed above 31, it simply means volatility will be on the higher side going forward. Also, the commodities are on the lower side as of now. Let us see what lies ahead, and more specifically we will look at gold and silver, because they are very near to the support level, and silver is actually consolidating. Gold has just broken its support line last week. I've discussed about that, but right now, with the recent close, it is very near to the big support. And as I told you, 1 year above 4%, 2 year above 4%, 5 year above 4%, and this is the actual reason money is flowing out from the developing market and going back to the US market, because you are getting 4%. Who would have thought? I mean, couple of months back you are not even 0.5%, and now you are getting 3.5% extra, 4%. So this is something which is phenomenal happening over here. Now, what I am specifically looking at, I have said this thing couple of times, and what I am specifically looking at here is the 3-month and the 30-year. And once the 3-month US 3-month treasury yield goes higher, or is more than the 30-year yield, obviously you will see the actual damage if it happens. And that's what actually, this is the only indication I'm looking for. Apart from that, we have seen the US dollar index started moving down from 114 to 112. So there is a slight correction, and we will talk about that as well. Now I want to share one important thing. Now, how far or how long the US Fed should go. I mean, because they are talking about a net positive interest, they want to control the inflation. Now, if you are looking at US CPI inflation, okay, US CPI inflation. So it is as of 13 September, it is saying 8.3%. Okay, 8.3%. So 8.3%, if I consider this as the latest figure, and the next will be released on October 13th. So 8.3% is the CPI, and the interest rate. So US interest rate, okay, so US interest rate, let us see. Right now it is somewhere like 3.5 and 3.75. okay, this is Fed fund rate, and it is showing right now it is showing 3.25. okay, so if I simply subtract, yes, this is as of September 3.25, right? So if I simply subtract 8.3 minus 3.25, it is just a simple calculation that I am showing, right? So what you are getting here is a number of 5.05. What this represent is, this is the net negative interest rate. Your inflation right now is CPI inflation 8.3%, the interest rate is 3.25%, and you want to curb down the inflation. Ultimately it will fall down, but if you keep on increasing your interest rate, you have to go above 8%. And whether the US economy is in a condition to sustain at that rate at that time. So that is first, whether this is practically possible or not. That's the first question, because the kind of hawkish commentary that you are getting from the Fed is something else, but this is the actual scenario. So if they increased it by 8%, you will see huge amount of money flowing back into the US banks, because now you will get a big percentage, as a interest rate in the banks. 8% interest rate means it's phenomenal. Why should a pension fund go for an equity investment if they will get 7 to 8% in terms of interest rate from US banks? They will save their money for 20-30 years. But that would be a problem for banks, because the kind of demographics, and if you're looking at the long term picture, US economy cannot sustain at that inflation rate. I know this is going a bit long, but this is important, or something important to be discussed. So this is a very precarious situation. Let us see how long they can go, and you will see that in next couple of months, if this is the actual thing that has happened, and that will probably happen, then in the next couple of weeks or months, we will see a big damage done. So we will see whether they will stop at 4%, because you want to go at 4.5 and then stop, and let's see, you want to see, or you want to keep on increasing interest rate. Because if you want to keep on increasing interest rate, you have to go another 4.5 to 5% on the upside. That's the bottom line. Now let's quickly analyze the important things. So first of all, the dollar index, which is actually not only hampering the global or other markets across the globe, but also creating immense pressure as far as the US market is concerned. But in short term, this is a 2 hours chart. So in short term, the dollar index made its high of 114.5, but it is looking at the kind of price action we have right now, it is moving towards or in between 108 and 109. So you will see some respite. There in terms of because even if the long term trend is on the downside, you will see a bounce back in between, and probably after continuous fall of last week, the stock market will show some respite in the upcoming week as far as the dollar index is concerned, because there is a direct correlation uh, if you compare currency and equity market. Okay, so equity market will go up, currencies dollar index is saying that it will go down. As far as Dow Jones is concerned, it is just started feeling the heat. Previously, Dow Jones is one of those index which is very resilient indeed. But as you can see, it has already broken all the important moving averages. If you are looking at the daily chart, if we'll go to the weekly chart, you can see the 200-day simple moving average has already been broken down, and if you go to the monthly chart, it has already broken below the 50-day moving average, and it is moving towards the 100-day moving average, simple moving average, which is somewhere at 24,000, in between 24,500. So technically this is the next moving average, or this is the next support which one must look at. So what does this indicate? It simply indicates that correction is there, and Dow Jones is on its way to retest the big support level. So this is the weekly chart, and the kind of trend we have right now, what does it indicate? It indicates a very simple trend. Okay, it is nothing indicate something phenomenal, but it indicates a very simple trend. And as you can see over here, the big support, or you will think of the correction will get ended somewhere near 23,700. So this is the point which at least I am looking at, and you will see the two big support, because you have already broken below your previous important support level. As you can see, the 200-day moving average, and that's where this line lies, and it's already been broken. So the big support, if you are talking about, is 23,668 or 23,700, and on the upside you have 30,000 to be crossed for any swing on the upside. Looking at Nasdaq, so talking about Nasdaq, which is extremely volatile, you can see in the weekly chart, it has already broken the 200-day moving average, similar to Dow Jones, and as far as monthly chart is concerned, it is moving towards the 100-day moving average, simple moving average, which is at somewhere at near 8,200. Okay, so if I want to draw some reference lines to see where the actual support lies in the upcoming months down the line, because if I draw a line like this, it's also fine, then you can see that the support is very near, which is 9,800. But this will not be justified because the I would say the moving average is not indicating something like this. So I will correlate myself more with the moving averages, because in the long term that plays a very crucial role. So if I may go with the moving average to be aligned with the price action, then the levels, or the level which we are going to look at as far as the big support is concerned, will be somewhere near 8,800. Okay, so let us see. So the one thing is very clear: you have corrections which is yet to be seen. But as I told you, in the short term, you will see that the dollar index has already started correcting, and that will probably gives you a positive vibe as far as the market is concerned. Now, let us talk about the gold, because this is one thing which one must observe. Okay, and even if the gold last week I've already told this thing that it has broken below the support level, but this has already started moving higher because it is trading very close to the 200-day weekly moving average. This is the simple moving average we have here. So if so what I have said, it is very close to the support, it is actually above the support level, so 1672, and the close we can see probably that was the adjusted price which I have shown you. So 1668, this is the close price, nearly 1684, so it is very near to the lowest end of the range, and that's where you are getting your opportunity. So it simply indicates that the gold will be on the higher side. Okay, so gold is trading at the lowest end of the range, so you will definitely see an opportunity. Even if this is just for the sake of trading bounce, the risk reward is in your favor. So with a stop loss of 1670 on the downside, you can again look at 1929, 1968 and 2090 on the upside. So what I can say here, or I want to end this session with a positive note, because last week was very bad, 8-10 sessions were very bad, and if you are looking at the dollar index, it has started correcting. So in the next week, hopefully we will have a good positive session going forward, at least for the next week, then we will take it from there. But on a bigger picture, which means in the upcoming weeks, probably I depend upon how fast the correction will be. There is some corrections which is yet to be seen. I mean 8 to 10% of correction which is yet to be seen as far as the major indices are concerned. So this is the end of the video. Thanks for watching.